Well, so this is contractor sol list today. Contractor sol list is a policy of engineering section. And I tell you the latest update about this. A recent information I have got that according to the Construction Industry Development Council, which is a body of India, around 32 million people are involved in the booming and thriving construction sector in India, which is worth rupees 2,48,000 crore. Say how big is the sector, and this is booming and thriving construction sector. 32 million people are engaged. Secondly, the construction sector is of 2,48,000 crore. So managing projects comes with inherent risk. Obviously, such a big risk are always having the inherent risk, which may include third-party liability, lawsuits to unforeseen events, and material damage due to natural disasters. Secondly, a civil construction site is susceptible to incidents like pilferage, theft, damage, legal claims, etc. So no contractor can afford without taking the CAR policy, because normally these projects are taken up by the contractors only. When the contractor is investing such a huge money or huge labor, no contractor can afford all these losses. And they will definitely go for CAR or even ER, depends upon the nature of projects. So this is one policy which is required very much, because engineering section have three kind of policies, that is ongoing construction projects, installation projects, machines and equipment, and project operations. This is most required section now. Why? Because a wide range of risks related to the engineering policies are there and huge money involvement is there. But as far as the question of CAR policy is concerned, this is required because India is among the fastest growing economies in the world. It is not on papers, it is an actuality, because rapid infrastructural development is taking place. And this rapid infrastructural development is in the shape of railways, industrial units, housing facilities, dams, flyovers, power plants, and other such construction projects. And they are under development across the country. Across the country means almost in all the states. So when such big developmental or infrastructural projects are there, obviously the rise in these infrastructural projects comes with the rise in material risk. So the possibility of damage to the construction materials, machineries, or construction portions due to environmental and man-made hazards can lead to substantial losses for the contractors. Big losses are there whenever these such incidents take place. So these all policies are divided into two parts, which is annual and long-term policies. And annual policies, which are related to the maintenance and repair, replacements, etc. But they are given only on the running projects, or which are operational or functional. Because these annual policies includes contractors, plant and machinery, electronic equipment insurance, machinery breakdown insurance, boiler and pressure plant, like that. So they are the policies required by the plant which is operational or functional. But these long-term policies or the project policies are required for those which are under development, they are under construction. Policy given to them is CAR and EAR normally. This is one classification according to the time factor. Now, another classification of engineering policies is according to the phases. Say, for example, for the construction phase, policies required are CAR, ER, marine conviction, advanced loss of profits or delay in startups. They are also known as the period policies or one-time policy. But for the running and functional projects, few more policies can be added which are prevailing now and they are developed by various insurance companies. Say for example MBD, BPP, MLOP, machinery loss of profit, CPM, civil engineering completed risk, electronic equipment and deterioration of stock. So either basis, maybe the period basis or the construction phase basis, whichever you refer, normally policies are the same with all the general insurance companies. These policies also have the extra risk which relates to the maintenance periods. So even when the project is completed, the maintenance period risk can also be included in the policy before it is handed over. And the CR policy is normally given to the projects which are residential and office buildings, hospitals, schools, theatres, production facilities, infrastructure facilities, airports, bridges, dams, tunnels and harbours. So any big thing which relates to the infrastructural development is subject to insurance under the CR or ER policies. Because if you see the airport, bridge, dams, so as a small contractor can't do all these things. Millions and trillions of rupees are invested in such projects. So these policies cover two kinds of risk, material damage and third party liability. Here the material damage is a big section. And the period of cover starts under two circumstances. Either of them is earlier. First, when the commencement of work is there of the project, or the arrival of first consignment at the project site is there, whichever is earlier. But the project will expire under three different circumstances. One, when the completed part thereof is taken over by the principals or owners, or the project is put into the service, or the date is specified in the policy, whichever is earlier. So these are the three circumstances. Now the important thing with this is, in case the work is not completed within the period specified, this policy is extended, not renewed, because the policy is one time. So there is a basic difference between CR and ER policies. And that difference is that if the erection or installation work is more than 50% of the total cost of the project, then the ER policy will be there. Or if the construction work is more than 50% of the total cost of the project, then the CR policy will be there. Now the unique features of the policy are, in majority of proposals, there will be a risk inspection by the company engineers. So the report of the company engineers play a lead role, very important role to decide whether the risk is to be accepted or to be declined. These risk engineers are playing very important role. Secondly, all these policies are depends upon the utmost good faith, because huge money is involved, huge time is involved. Policies can be issued in the joint names of two or more parties like principals, contractors, subcontractors. Almost all classes of engineering insurance are controlled by tariffs for the purpose of wording, terms, conditions and clauses. And the sum insured of the policy is adjustable. Now the CR policy, it can be given only to those projects which are located in India, and for which the more than 50% of total cost relates to the civil work or construction work. Either the principal is taking, or contractor is taking, or subcontractor is taking, they are allowed to take policy. That means you can sell this policy to the government contractors involved in government projects like road construction, bridge construction, building construction, and to the builders and developers who are developing the township. So policy is very important because all these projects which you are seeking, which you are seeing here like road construction, residential societies, hospitals and office buildings, they need CR policy. So the section 1 of the policy, that is material damage, is very wide section. Because the policy is all risk policy. All risk policy is covering all risk excluding the specific exclusions. Third party liability is of course for both property damage as well as the personal injury. But material damage is a very wide section. Because this is covering the risk related to the fire perils, construction faults like defective materials, workmanship, collapse, human errors like lack of skill, negligence of workers, other perils like air crash, blastings. So they are all part of the material damage section, means covered under section 1. And you can imagine the losses in a real loss image, that what kind of losses could be there. Risk related to the property is there, death of the persons is there, death of third parties is there, breakage of machineries is there, collapse of the constructed structure is there. For everything, the insurance company has to pay under the CR policy. So this sum insured of the policy should be selected very wisely. And everything should be included because it's the policy subject to underinsurance. Underinsurance should not be there, otherwise the insured will suffer the proportionate loss. So try to include everything which is related to the imported machineries, indigenous machineries, cost of construction, permanent civil engineering work, escalated cost, and even the cost incurred on material, wages, freight, custom duty, construction cost, etc. Everything should be included. That means all these components should be considered. Project cost, construction cost, project location cost, coverage requirements, and tailored insurance solutions. Company can provide tailored insurance solutions also if any specific requirement is there, because the add-on cover facility is there. And these add-on covers are available under these forms: third party liability, surrounding property of insured, escalation, removal of debris, CPM, and maintenance. Any of them or all of them, because they are available on payment of additional premium. As per the requirement of insured can select anything or everything. Because the losses could be very wide. The entire constructed portion can collapse. It can cause damage to anything which is coming across the way. So certain things are not covered under the policy, like willful act, negligence, or consequential losses, cost necessary to rectification, or the risk of those persons who are the employees of the employer or the contractor, because their risk is covered under the WC policy. Third party liability coverage could be taken as the wider coverage, because third party liability cover is required in such projects where the term is longer and the projects relates to the construction. So the third party coverage can be opted by two manners: any one person limit or any one accident limit. Accordingly, the premium will be charged. Here, sometimes the third party loss is caused in such a manner that if a building or the constructed portion is collapsing, even the passerby is made killed. So the passerby will definitely become the third party for that purpose, and they can claim compensation from the insured or the contractor. Claim could be partial loss or total loss. Under both the circumstances, only the policy clauses are applicable. In case of partial loss, repair cost is paid. In case of total loss, the total losses are paid minus salvage, minus under insurance, minus compulsory excess. Rest of the amount will be paid by the insurance company. Policy is subject to reinstatement of sum insured because if any claim is paid during the policy period, the sum insured will be reduced. So in that case, it is always better to pay difference amount of premium to restore the sum insured. That is beneficial for the insured himself. So when you are giving this policy to anyone, keep in mind certain things. The rate of the proposal will be according to the occupancy or the nature of projects. Because rate for road construction will be different, hospital will be different, industry will be different. So base rate is taken from the tariff and then the tariff discount etc. are provided. Mid-term cover can be given. If in case the project has already started, policy can be given mid-term. But there are two conditions. First, the insurance company will charge the premium from the date when the project was started. An insurance company will take a declaration from the insured that there is no loss as on date. Then only the company will take the risk. A small term, if the project relates to short term, say 6 months or 8 months, the policy can be given. Extension is given only when the project is not completed within the stipulated policy period. So policy can be further extended for the required time. Insurer can also get changed sometime. No insurance company will take the risk in between or mid-term of the policy. But if they are taking the risk, they will prefer to take the premium from the date of commencement of the project. Then only they will accept it. Installment facility is there if the project is longer than 12 months. Higher discount facility is there as per tariff if the insurer is agreed to bear the higher compulsory excess. Say suppose he is agreed to bear the 10 times of the minimum excess, he can be given 20% discount on the premium. Now there are two important clauses available with this policy. One is 50-50 clause. This clause is very often required by the contractors because they know the importance of this clause. That on completion or after handing over the project to the owners or to the principals, if they discover any loss, when the insurance is terminated or expired, if they discover any loss, they will definitely prefer to claim it from the insurance company. An insurance company will definitely deny it because the policy has already expired. And they have neither intimated during the policy period nor discovered during the policy period. So the first doubt of the insurance company would be that this is the latest loss which is taken place after the expiry of the policy. For that purpose, the surveyor can be appointed or investigator can be appointed. You can examine whether the loss is current or previous one. Because when it has come to the knowledge today, when the policy has expired, say 2 months before, 3 months before, 4 months before. So how the insurance company will accept it? Even if the surveyor is recommending that the loss seems to be older one, but how old? Whether it was covered during the policy period or not. But these policies are taken by the reputed firms or by the big sum insured for longer terms. And this kind of dispute always arises. So there is a provision of having the 50-50 clause. Under this clause, insurance company bears 50% of the cost of the loss and the remaining 50% has to be borne by the insured himself. So this is a good method of reconciliation and the loss is paid by the insurance company to the extent of 50%. Another important clause is 72-hour clause. Sometimes the losses take place in such a manner that the entire loss doesn't happen in one time. It may have such a severe impact that the Other day also some portion may collapse. And the next to that day also some portion may collapse. This kind of losses are caused by flood, earthquake, fires, storm, cyclone. So insurance companies have the provision of compulsory access on each claim. And if it is reported in different intervals, that means each day a new case is registered. So for the same location, same insured, same project, same contractor, same cause of loss, if the incident is still giving the losses on different dates, and insured is reporting to the insurance company, so number of cases will be registered. And if it is so, then in case the insured will be a number of compulsory excesses, that would be a great loss to the insured. So if they have taken the 72-hour clause, the favor they will get from the insurance company is that within 72 hours, means within 3 days, whatever incidents or collapse have taken place, they will be treated as one loss only. So only one compulsory excess will be treated. And after 72 hours, each day, there will be different loss. So the basic difference between CR and EAR is, if the construction cost is more than 50% of the total project cost, then contractors always policy is given, because CAR means civil cost. And if the erection cost is more than 50% of the total cost of the project, then the ER policy is given. So this is all about the CR and ER. If you have any questions, you may ask me. Any doubts or any questions?